Hi everyone, welcome to WIC channel. My name is Rifad. On this video, we'll be covering one of my favorite stocks, one of my pure fund I found back in November, which I'm really excited for the company and their potential growth coming along for 2021. And yeah, so it's and they've been growing on tier, and right now the stock has been skyrocketing like for the in the last month or so. So I just want to cover them, and yeah, so their company is called Bragg Gaming. It's operating. It's pretty much in the online casino platform world. I will cover in terms of like what they do and like and how the revenue model and what's kind of the revenue forecast and all this kind of stuff on this video. This video is going to have a lot of content, so I hope to kind of make it clear as possible to everyone out there. But if I don't, don't hesitate, drop a comment down below with any of your questions and I will gladly get back to you. And like always, if you like the video, hit the thumbs up. That will be amazing to kind of YouTube algorithm. So that's awesome. So yeah, so let's kind of like jump into the content. So let's start here. You guys can see here if I show my chart. So roughly like 6-month chart, stock has gone from like 50 cents to like $2.50. Has skyrocketed like crazy. So it's really exciting times for them, and I think the market is finally valuing them for their pure potential that they have. But I wouldn't hide that like before November, even October, they had like a lot of stuff they had to kind of solve because a lot of debts were coming close, so they had to kind of like do a kind of lot of stuff and pay off them. So I'll explain that in the second portion in terms of like what happened and all this kind of stuff. So so let's start here. Let's start with the Mispresentation. Like always, before we gonna talk a bit of management, I just want to kind of say what they do. So they have the main Bragg Gaming is all about Orax Gaming. That's pretty much the whole 9 degrees. And what they do is Orax is they offer online, like you're a casino operator, you want to come online, they provide the platform, the everything, so you can just kind of turnkey come online, be and like start choosing what you want. So I call them like the AWS of the casino, because like they have a bunch of stuff here, like they have the casino, sportsbook, lottery, and other games also that they have. So you can pick and choose what you want. You can take the whole suite, or you can just say, I want example casino, sportsbook, I don't want the lottery. So those kind of stuff is kind of great. I find them as per not like a competition with a casino operators, more like a partner, and providing me the platform, taking care of A to Z of any maintenance and stuff like that. So casino just kind of like doesn't deal with that. So it's kind of like they get the opportunity to kind of take advantage of the online shift, and also like not to worry about all the kind of so casino is more happy with that, not worry about all the infrastructure, keeping the content up to date, keeping everything up to date. They don't worry about that, so they just kind of pay them and they're gone. So, and one of the great advantage for Bragg Gaming is that they don't worry about regulations and all the laws of each district, each country, each region. So they just have to kind of like, hey, example, you're like in Canada, you want to come online, like, hey, do you have the right regulations? Do you have the right law, licensing? Yes? Okay, come online. If you don't, no. So it's kind of that kind of perspective I like, is because you don't deal with those bureaucratic stuff, just make sure like the clients, they do that. And I think that is the hardest part. And which I love that they don't have to do that. So it's kind of like a perfect win-win, and it kind of creates a good, not much cost to acquire, I would say, and like the AWS platform, I would say, just pick and choose. So, and going back to the management, this is like this presentation was done in 2020. They kind of was able to get a new execs onboarded also, which is kind of great. They have a good management team, and the founder of Orax is still part of the company, which is very important. Oraxi, if I'm not wrong, and Adam is now he's the CEO. He's amazing. He's doing a great job, and also so it's kind of like all these factors in. We have a young, enthusiastic, and active management, which I like. So really focus on growing the company and not playing around, I would say. So that's kind of good. So yeah, so what is about the revenue model, right? The revenue model is kind of how they work is like you see here, the casinos over here, they kind of use a Bragg's platform. They take a percentage of the gross gaming revenue. That's pretty much it. And the payment goes directly to the clients. So it's kind of a perfect model. There's no hassle, there's no fee. So it's kind of a great thing. And Also, one of the great factors about them is that they have lost 0 customers in the last 5 years. So that for me is great. And that means they're still onboarding customers, and that means they're very satisfied with the overall service that they get, that they remain on the platform. And also one of the great thing is to bring customers online. They do it very fast. It happens literally, like, they don't mess around. It's online pretty fast. I think like in a month or two. I think usually when stuff take a year to come online. So that is something I admire, and this is the mention too, right? And now let's kind of go into the bit of financials they have here on the revenue growth that happened so far. You guys can see this quarter 3 they did $18.1 million in sales compared to last quarter of 10 million of quarter over quarter, year over year. And I know quarter over they went down quarter over quarter, but it's okay because I think you should always compare year to year because there's a seasonal effect and all this kind of stuff, so it's kind of those kind of factors explain that they're still growing, and 50 million so far in revenue for the 9 months compared to 29 of last year. That's also wonderful. And also something is like they're really working on diversifying the customer base, because as you guys can see here, that was one of the icks of Bragg, right? They were getting a lot of customers from like top 10 clients, were like last year was 76% of the revenue. Now it's 62. That means that's kind of showing that they really put an emphasis on diversification, and that's what they're doing this year, and it's kind of paying out. You can see um, their profit margins have been going up, and so sorry, no, adjusted EBITDA, sorry, is been going up. So that's kind of another. Adjusted EBITDA is coming at like 8.7 million for forecasting for this year. And so annual revenue, that is something that really excites me, I would say, and that kind of was my like whoa wow moment. Was this year they're forecasting to make around $67 million Canadian, and if you check at the market cap, they are trading like at right now they're trading at 291 million market cap, and you're like, yeah, but that's still very like almost like 4 or 5 times revenue, right? I would say yeah, but if you compare to other companies like Gran is one of the big competitors, and they are trading like 20 times revenue. They're trading, so that's kind of very interesting, the potential that they have, I would say. And next year they're forecasting 79 million. I would say that was very conservative, is because I read one article and everything, that because they did a recent like round of investment, and during that one of the conditions was to make a forecast. So they made a very conservative forecast of 79 million. I think easily they can break it and go further with all the new contracts that have been coming online recently. I think that will be an easy beat. So yeah, even if you take like this year's revenue and like next year's revenue, the market cap does not make sense. So it's like, if you take like right now at like 291 divided by, if they do 80 million, so it's like 3 times sales, and like it's crazy, 3 times sales and 4 times sales, of roughly 4 or 5 times sales of this year. So it's very cheap compared to what technically a company of that stature should be kind of delivering. And their presence is also very interesting, because when you kind of go here, if I'm not wrong, they kind of chart over here. They're present really on Europe, and now with US also coming online, and Canada also potentially voting. I think towards the end of this month, February-ish, they should be voting. So that kind of thing is great. And like them right now with their agreements with like all the big casino dealers in US, also recently released news. So they should be able to kind of move faster in, because like casino dealers are going to casino operators are going to have the regulations and laws and everything prepared, right? So you don't have to worry about that as a Bragg. You just have to make sure like, hey, let me make the right deal. Let me call up this casino and like, hey, you have the regulations, let me bring you online. So it's kind of less of hassle of like all the paperwork and waiting after the governments to kind of give you the authorizations. You just kind of go online, right? So, and now I think those kind of 2 markets coming on and not dealing with it, it's great for them. So that's one. So it's kind of and that's kind of it, I would say, in terms of like stuff. I would say the potential, and like they kind of cover more in details in the potential and all this kind of stuff. But but yeah, so I would say, yeah, so it's kind of the forecast also I covered. And one of the risk factors I would say that is not mentioned is the German regulation right now. Germany is like undergoing right now some kind of regulations and like tightening up, if I'm not wrong. And that's kind of bringing some cloud on Bragg Gaming. But I would say it's not as a bad deal, because Bragg, what they can do is help the current casino dealers, operators, I keep saying dealers, operators, to get the correct regulations, get the correct licensing, and worst case, leverage them and help them to get them so they stay on the platform. Because in terms of, it doesn't really affect them, because I find that Europe was one of the hard, right now is a hard market compared to like, US and Canada, because they're going to open up, it's going to be very easy. But with Europe, I think they can help them. They establish in a hard market, which is Europe, in my opinion. And US and Canada is just going to be an easy flow in, I would say. So let's move on. Right now is in terms of like the debt. So the debt was it something that was not a cloud in the company before it was kind of cleared out, is because how they set out the Orax deal when they bought them was they kind of paid a percentage out of the revenue generated, like I think for 2 or 3 years, if I'm not wrong. There's a payout period, and there was a final payout period that has to be done, and that was for this year, and that was like approximately 22 million euro that has to be paid out, right? And but Bragg didn't have that money, so one of the good things is, like I mentioned here, Orax is run by this guy here, and they bought it from him, right? Let me just scroll back up. They bought it from him. And this guy, he pretty much could have said like, hey, like pretty much what they did, they convert the whole deal into shares, right? And they showed the conversion price at 73 cents. And this was back in like November 7th. So November 7th, like Bragg was around like 80 cents, like it was around here, right? Yes, it was cheaper than, example, what do you call buying off the market, but still he chose like, hey, just give me at 72 cents per share. So that means for me, this is kind of like a good sign in terms of like, hey, like he said, like, give me 73 cents per share, because that means he knows the company's worth more. Company's worth more than this, and the potential is great. So he's like, just give me that, I'm okay, and convert it and pay me off the last 22 million. And doing that, so is like there's a heavy insider ownership right now. There's already kind of now, it's like, I think like if you do in the approximately, like if you bring it into the numbers in ownership wise, like roughly 40% of the outstanding shares are owned by insiders. So that's kind of a great thing. And also you see also Richard Carter, which is, if I'm not wrong, it's him here. He also bought more. He kind of was participating in the 3 million. He did here 3 million in gross proceedings. So it's kind of like this is mostly for all the executives and also the employees and stuff like that. But Richard Carter was part of it. So I think they did another kind of extra like revenue. Not revenue, sorry, I'm badging my words, sorry about that. They kind of like did a private placement, and they were able to get $3 million, and it was mostly done by the employees and board and Richard Carter. Everybody's like part of it. So it's kind of, that kind of shows like, hey, they believe in the company, they know the company's going to be big, and so they kind of did a placement at like $1.21, and so it's kind of a good and that brings a good confidence, I would say. And like roughly 40%, if I'm not wrong, is owned by insiders. So that is, for me, is wonderful. So it's kind of, I would say, so kind of like, let's kind of like, pivot back. I think that's about it I had to kind of show on the computer. So let's pivot back here. Can change here. So cool. So right now, with the potential, I would say, of like how the company operates and the company is, I think it has huge potential. It is with Canada, US coming online, and I find like the AWS for the casino. And right now, one of the beautiful juicy news is uplisting, right? I think I kept this for the last, is the potential of uplisting from the THX Venture to TSX, and also a potential listing into a US stock exchange. So that is, for me, it's all coming in the 2021. I didn't talk about it a lot because they had a lot of stuff to deal with, especially paying out the debt and like all these kind of placements they had to do. So that's done. I think going online and bringing is going to give the stock is just going to boost once it goes online. And if you when you compare it to its competitors, it's just going to come, just going to like at least like crazy 6x stuff like that. So it's going to be a crazy 10x some company coming soon online. I would say with all the growth and executions that they have been doing, right? And the fact I keep on saying is because it's not a competition to casino operators, it's more like a partner. And if you see all these kind of thing companies, I keep on saying Grand as one. Grand, if you take them as an example, they are a competitor of them. And like if you take how much like revenue they make, technically Bragg makes more revenue than a Grand. And so that means if you put the same kind of price to sales ratio, if you apply to Bragg is like crazy undervalued, I would say. So those are kind of my final thoughts, I would say. And also I would say also one of the reasons I want to release this video as soon as possible is because there's warrants that are going to there's a possibility that people will expedite the warrants. And one of the clauses on the private placement was that if the stock trades more than $1.50 for 10 consecutive trading days, people can expedite the rights and buy it at $1.50. So I think it's just that not $1.50 buy it less. I mean, what's going to happen is that you might have a down pressure, and doing that, so you might have a great window of opportunity to buy this stock. The window of opportunity, I know how long it'll last and stuff like that. So I just want to kind of put that out there. So it's important to kind of foresee. Yeah, so that kind of resumes the whole video. I know I kind of didn't cover also the Grand and the Bragg comparison, but I know I'll drop a link down below that one video that they did, an hour-long video that person did, was really talk in depth. They compared the both versus Grand and stuff like that. If you guys want to kind of go ahead and watch that, but I would say if you do take like really compare, it's really undervalued. The management is really executing all what they do, and they're really focused and they're hands down and doing hard work on execution on this company. So I'm really excited for them. This is one of the stocks I really love and I'm proud to own for 2021, and I'm looking forward to see what kind of results they end up delivering, I would say. So yes, so hope you guys like this content, and like it was very informative. I know it's very long, I apologize. And I was trying to put a lot of information in one video. Anyways, if you have any questions or stuff like that, like always, I'm always open. Drop a comment down below and I will gladly answer them. So thank you very much for watching, everyone. And I hope you have a wonderful day. Whoosh!